What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So this is going to be part of our daily market update. We will go over the S&P 500 futures and where they are trading. We'll also go over the VIX index, which is going to be the volatility on the S&P 500. And I'll also include some other pieces of news, the earnings report, and everything that we need to look out for next week. I'll also go over the US 10-year Treasury yield, which has a very significant correlation with the S&P 500 and how it's been trading, and then finally give you guys a quick update on the stimulus package and kind of go over what that looks like next week. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Also, if you're new, make sure that you subscribe and hit that notification bell, because these videos are going to be packed with some really important and time-sensitive information. So make sure that you hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So next week is a big week. We have a lot of companies reporting their earnings, kicking us off with IBM, which is going to report tomorrow right after the markets close, followed up with companies like Coca-Cola, Snapchat, Tesla on Wednesday, along with Microsoft on Wednesday as well, which are going to be huge earnings that are going to be reflected in the stock price on those days and also the indices that they represent. And then we have companies like Amazon, AT&T, and Intel essentially announcing their earnings later next week. So that's definitely going to be an interesting week. And aside from the earnings, we have the stimulus package update coming up. The Senate is supposed to come back from the recess and discuss further stimulus and how much that's going to be and if we are going to actually pass the bill. Now, the current CARES package or the stimulus payment ends at the end of this month. So they've also mentioned that the next stimulus package will be the fourth and final, and how the price tag can be close to $1 trillion. Now, that will cover things like the stimulus checks that the government has been paying. It's also going to cover the expanded federal unemployment benefits along with back to work bonuses, payroll tax cuts, business liability protection, and additional items of interest. Now, that's a lot to fit in just one bill, so I'm really curious to see what they come up with and how that can potentially act as a positive or a negative catalyst and can eventually send the markets higher or lower next week. So now we're going to talk a little bit about sector rotation. Now, up until now, it's no doubt that tech stocks in general have been carrying this market on their shoulders. Companies like Apple, Microsoft, Amazon, Netflix, Facebook, and now even Tesla have essentially been hitting all-time highs. Now, this past week, we did see a minor glimpse of some type of sector rotation with tech dropping, and you see this heat map right now and how Microsoft and Amazon both dropping close to 5 and 7.5% respectively on the week. Facebook down close to 1.24%, Google down close to 1.5%, and Netflix, after their earnings, took a beating and they were down close to over 10% on the week. And Apple was the only stock that finished higher at just 0.5% in gains. But it's still kind of unclear if this is just a minor pullback or a full-blown rotation as the economy opens back up, and there's also some positive news about having a vaccine and people are investing in other industries. But that being said, now we're going to jump over to the S&P 500 futures and how they are trading today and where those next key support and resistance levels are going to be. So now looking at the S&P 500, you can see that we were up close to 28 basis points and we closed at 3,224. And on the weekly basis, it was up close to 1.25%. If we go over to the NASDAQ index, you can see that NASDAQ was actually down on the week close to over 1%. And Dow Jones, since it's a little bit more diversified when it comes to the different sectors or industries that it follows, it was up close to 2.29%. Another thing that I want to mention is if you go over to the Russell 2000, which essentially covers some small to mid-cap companies, you can see that it was actually up even more than Dow Jones, S&P, and the NASDAQ combined, close to over 3.5%. So that right there is something to think about and something to consider, because NASDAQ, since it covers mostly the tech stocks and not just any tech stocks, some of the bigger ones, the bigger names that we have been following, and it was down. And the Russell 2000, which covers some of the small to mid-cap companies, which we may or may not have heard of, was actually up close to 3.5%. So that just goes to show that there might be a little sector rotation coming up, because tech in general has been a little bit overvalued and the NASDAQ has been hitting all-time highs pretty much every single day, right? So NASDAQ did have a minor pullback, but moving forward, it's a little bit uncertain if it's going to continue the rally that we have seen more recently or if it's going to have some type of pullback before hitting all-time highs. So now if we were to go back over to the S&P 500 and if you were to look at the futures market, you guys can see that we are right now for the S&P 500 futures, we're up just about 12 basis points, so we're trading pretty much very flat on the day. So there's a lot of uncertainty as to where the markets are potentially going to open, because this right here is in no representation on where the market can potentially open, because things change overnight. And if there's any type of news, any type of catalyst related to the stimulus, the earnings, the vaccine, anything can drive the markets higher or lower, right? So if you've been following up with any of my previous market updates, you have a really good understanding on where those key support and resistance levels are going to be. But to give you guys a quick update on what we have been following, if you were to go back as far as June 8th, you can see that we hit a high point of 32.33, and the pattern essentially got rejected here, which is what this red rectangle represents. And it's also our ongoing bear camp and a level of supply and a level of downward pressure coming in from the bears. So we essentially hit that level, and then over the course of the next few days, you can see the S&P dipped down close to over 7%, going all the way down to 3,000. And then we found a really good support here, and this is where our bull camp sits. We essentially found support here, pushing up over 5%, and then got rejected at this 3150 to 3155 level. Now this level was acting our bear camp in general up until July 6th, when we finally broke out of that level. So we got rejected here once. We pulled back down to the 3,000 level again on June 29th, so the last week of June, and this 3,000 level validated that support, and it is a level of demand for the S&P 500, right? So we finally make our way back to the 3155 to 3150 level, and then eventually break out, and then getting rejected at this 3180 level, which has previously acted as some type of support if you were to go back over here. So on June 10th, we essentially pulled back down to 3180, but then pushed up. So this old support starting acting as new resistance. And then we were essentially consolidating for this entire week, and there were some pretty big candles. You guys can see that we had a bull day followed up by a bear day, a bull day, a bear day, and it was just going back and forth between the bulls and the bears until the bulls finally broke us out of that resistance at 3,200, and then we are now just sitting at our bear camp at 3230, which we have previously seen on back on June 8th. So now if you were to go over to the 1 hour chart, this right here is how the S&P 500 has been trading, and you can see in my previous market updates I mentioned that since we are hitting some type of support first and then pushing up to our resistance, I do see an upward momentum. I do see some type of bullish momentum in the markets, and eventually we can see a further break out of 3230 and then retesting highs from back in January and even February to all-time highs. Now that being said, there is no certainty if that's actually going to happen. Tomorrow, my analysis is that we're probably going to open flat, and then moving forward, we can either retest 3,200 right here, because that has previously acted as some type of support here as well. If we were to break below that level, then of course our next support sits at 3184, which has previously acted as some type of resistance going back even further. If we did push up higher tomorrow, we do need to break out of 3230, because that has acted as a very strong level of resistance and our continued bear camp. So if the bulls want the pattern and the S&P to hit all-time highs, we do need to break out of 3230. Let me know what you guys think in the comment section below, because there's going to be a lot of volatility next week, and it's going to be really, really interesting how everything gets priced into the markets, whether we're going to see an upward momentum, whether the earnings calls are going to force us down to 3200 or even down to 3180. And if we do break below 3180, then the pattern is going to retest 3150 to 3155 level, which has again previously acted as really strong support here. So let me know in the comment section down below, what do you guys think? Where are we headed next tomorrow? Are we going to hit as high as 3230? Are we going to break out of that level? Or if we're going to retest 3200, break below 3200, retest 3185, or even further down to 3150. I personally do not see the pattern going as low as 3,000, which we have hit multiple times, going back as far as June 29th and even further back on June 15th, because it's just going to be a significant drop in the S&P 500. It's going to be a drop of close to over 7%, because the Federal Reserve is there to backstop every move that the markets make. So it's really going to be interesting to see how everything plays out. But let me know in the comment section down below. To give you guys a quick recap, 3230 remains our bear camp, which is what we need to break out of in order to see all-time highs. 3200 is going to be our next key support that we need to watch. If we we were to break below that level, 31.85 is what I'm watching next in terms of the support. And if we were to break down even further, then the next support sits at 31.50 to 31.55, which is going to be a drop of close to 2 to 2.5%. So there are two more things that I'm going to go over in this video, and we're going to compare the S&P 500 with the US 10-year Treasury yield, and that is going to be ticker symbol US10Y if you're on your TradingView platform. So you can see how there's some type of an inverse correlation between the two, and the US 10-year Treasury yield is seen by many people, many investors, and many economists as a way to understand the market sentiment and how the people are responding to the current market environment, right? It's also a way to understand the confidence level for the people. When the confidence level is usually high, people tend to invest more in equities, which drives the yields lower, and vice versa. So you can see, going back as far as March 23rd, this is essentially where the markets basically bottomed out. You can see how the S&P dropped close to about 33 to 34%, hitting as low as 2,219. And at that level, the US 10-year yield was right here around that level. You can see that it was pretty much going up, and it had bounced close to over 250%, hitting as high as 1.273%. Now, the 10-year yield is also really important in terms of the mortgage rates and where the banks set their mortgage rates moving forward. But that being said, you can see how the S&P has made a significant recovery, going up over 43%, and the yield has essentially dropped close to 57 to 58%, and it's now just trading in between this range, kind of like this area where it's kind of finding some type of resistance and some type of support. So another instance where the yield essentially pushed up and the equities or the S&P 500 took a dip was right here back on June 8th, when the S&P essentially hit a high of 3230, which is our next near-term resistance that we are following very closely. The S&P dropped close to over 8 or 7.5%, and at that point the yield essentially jumped close to 51%, pushing up all the way to almost 1%. That being said, you can see how it's just been consolidating, and there is some type of strong support right around the 0.5% mark, right around 0.5 to 0.5332, right around that level. So it'll be really interesting to see if the yield jumps one more time. If we do see another jump in the 10-year yield of close to 40 to like 45%, that can result in the S&P dropping close to 6 to 7% and retesting lows of 3,000. But again, that's going to be really interesting to see if that actually happens. Again, there's no certainty if that's actually going to play out, but it's just something that we need to be prepared for and consider when we are managing our risk and we are kind of managing our portfolios from a risk perspective. So now if we go over to the VIX index, which is going to be the volatility on the S&P 500, and if I were to kind of bring up the 200-day moving average, so if we go over to the SMA, which is going to be the simple moving average for the VIX index, and if you were to go ahead and change the length to 200, you guys will see that it's right at its 200-day moving average, right? So let's go ahead and change the color so it's much easier for us to understand, and you can see how the VIX index is essentially right at its 200-day moving average, and it's very similar to the 10-year yield in terms of how it trades with the S&P 500. So you can see that going back as far as March 23rd, when the VIX index was essentially at its peak of close to 83 to 84, and it jumped close to about 298 to 300%. But moving forward, you can see how the volatility essentially died down all the way down to this level at 24, but then we again saw a sudden spike in the volatility, and this again is going to be a drop in the S&P 500 going back as far as June 8th in the first week of June. So now moving forward, again, the volatility or the VIX index is right at its 200-day moving average, which has previously acted as some type of support. You can see that it bounced off of that level and had that spike. So there's no certainty if the spike is going to come. The volatility can very well die down even further and dip below its 200-day moving average. But again, it's just something that we need to consider and keep an eye out for. If we do see the volatility spike again, that would mean that the S&P could potentially drop, because the VIX again is seen as a fear gauge, and a spike in volatility comes in times of economic distress and financial disruptions. So that being said, let me know in the comment section down below in terms of the S&P 500, what levels do you think we're going to to test first, and if you're going to break out of the 3230 resistance and retest highs from back in January, or even go as high as all-time highs. If not, if you're going to pull back, and where are we going to pull back down to? Let me know in the comment section below. As always, if you guys did enjoy this video, please make sure to drop a like. It really helps out with the channel. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.